Good morning. Good morning, everyone. And thank you for joining us for this session on innovative financing mechanisms for Africa's energy transition. My name is Rin Barhab. I am a senior energy economist here at the Policy Center for the New South, and I am delighted to be your moderator today. So we all know that the urgency of Africa's energy transition cannot be understated. However, achieving our ambitious goals, green goals, requires significant funding. So a staggering $3 trillion, far exceeding the current climate spending of $600 billion USD. And just focusing on sub-Saharan Africa, we need about 20 billion USD annually just to bridge the energy access gap. And this is where innovative financing mechanisms come into play. So these mechanisms involve mobilizing private capital through green bonds, for instance, and impact investing. And it also involves maximizing public resources with grants and guarantees, and empowering communities with microfinance and carbon credit, and leveraging technology. So throughout this session, we will explore the challenges hindering these innovative financing mechanisms in Africa. And we'll also discuss the role of the private sector in supporting green transitions and how collaboration between public and private can unlock the full potential of investment by combining this resource mobilization with returns and risk mitigations. So to guide our discussions, I am honored to have two prominent experts with us today. We first have Hans-Peter Lankes, who is Managing Director and Deputy Chief Executive at the Overseas Development Institute, ODI. Thank you for joining us. So Mr. Lankes is also affiliated with the LSE Grantham Research Institute and the LSE Oxford International Growth Center, and his research work focuses on development and climate finance. And we are also pleased to be joined by Daouda Sembene, who is CEO of AFRICATALYST, a global development firm based in Dakar. And he also serves as a distinguished non-resident fellow at the Center for Global Development, CGD in Washington. And his extensive career includes leadership roles at the IMF and advising the presidents of Senegal on economic matters. So welcome again, ladies and gentlemen, and thank you for joining us. We'll have a first round of intervention by our experts, and then we will open the floor for a Q&A session. So without any further ado, Mr. Hans, the floor is yours. So what are your thoughts on this very interesting topic?
Thank you very much. And thanks so much to the Policy Center. I think it's just an amazing space to be holding this. I've made the proposal that the Policy Center should become the center for all the think tanks to have their events. Would be so much better than the space that we have, for instance, at ODI in London. Anyway, it's a topic that's been on everybody's minds now for a few years. It's been quite central in some of the global debates. How do we mobilize more finance for the climate and development goals? And to my mind, and I'm going to go a little bit into this, the solutions are generally there. Many things have been tried over the years. We know what works, we know what doesn't work. What's been missing is the political will and the impetus to bring them to scale, and especially to bring them to scale in Africa. So let me take a step back first and look at what we're actually referring to when we talk about innovative approaches to addressing the green finance gap. What is the finance gap? Much of that gap is not really about the climate or not about the climate alone, but it's about development more generally. If we think about resilient agriculture or adapted cities and housing, and it's about economic transformation. When we think about energy access, about green supply chain opportunities, we cannot put them just neatly into a particular box that is climate and let's increase climate finance. It's part of the broader development story. Climate finance, green finance is growth finance, and it's very important to have that very clear. The second is Second point here that I want to make is it's clear that there is too little finance. But if it were to emerge, if we were to find these large pots and come to Africa with them, we would not necessarily find the projects to finance. There is as much of a constraint on the side of availability of bankable project pipeline as there is on the side of finance. And any solution that we look for to the insufficient investment that we have, we'll have to look at both sides. If you go to an international financial institution, and I've worked for decades with the IFC, World Bank, EBRD, and we were colleagues at the IMF. If you go to those institutions and you ask, what is your main constraint? They're going to say, it's the availability of projects. They're not going to say it's the availability of finance. In reality, it's really both, and we have to think about scaling up both. If I now were to look at trying to summarize a bit the debate that's happening at the global level about climate finance in the COPs, about MDB finance now in the G20, about global financial architecture, what has emerged over the past few years, and I had the privilege of being a member of the G20 panel on capital adequacy of the development banks, and part of that, the so-called core group of the independent expert group under the Indian G20 last year. And now we're advising the Brazilian government on the roadmap for reform. And if I were to summarize that in just like 4 bullets, one is what we've already heard in the panel before. Domestic finance dominates and will have to dominate, and we have to find solutions for domestic finance. The second is we need much more bilateral ODA, official development assistance, that is high quality money, but we are very unlikely to get it. The expectations for that are very, very poor. In the IEG, we tried to quantify these things. We said there will be a need for about $1 trillion in external finance to support countries with their development and climate needs, all the development countries excluding China, over the next few years. Of that trillion, the expectation was that about 180 billion would have to come from concessional sources, and about half of that would have to come from bilateral ODA. But again, expectations are dim. Third point is we need much more finance from development banks. Development banks can play a much bigger role than they do, and in fact, they are an instrument that is to a good degree under our control. So a lot of the energy right now in global discussions is really focusing on that because it's something we can control, where the expectations are reasonably good. Going back to that 1 trillion, the estimate there is that non-concessional financing through the development banking system should account for over 30% of that gap in the future. Additional financing, 320 billion. And the largest share of additional finance, some 50% or so, will have to be private because we cannot expect more, we cannot milk the development banking system more than that. We don't have the expectation that official development finance is going to grow enormously. So if we want to meet these gaps, we have to tap private sources of finance. That will be hard, but the alternative, public, is unrealistic. So when we talk about financial innovation, we therefore mean the following. We mean that we have to find ways of raising domestic fiscal and capital markets. That's going to be tough, but feasible. We heard a bit of a discussion today. It's probably something more for the long term. We're talking about how each dollar of official funds can go further because there will be so few of them. Can we make more of those official concessional finance? Third, it's about optimizing balance sheets and lending models of development banks. And fourth, it's about how we can unblock large amounts of private finance. That is financial innovation in a macro sense in the coming years. That's what we have to achieve. And the sobering truth is that there is actually a lot of innovative finance around. If you look at the last 10 years, there have been so many schemes that have been tried, many of them quite effective. You look at them, you look at FMO's one, and the Climate Investor One, a very interesting, very effective scheme. You look at the BlackRock Climate Fund, you look at the TPG Rise Impact Fund, at HSBC's Fast Infra. Those are things that are, in principle, well designed, are producing some results. And all of these operate, at least in some part, in Africa. But you put them all together, and in the aggregate, we're not succeeding. In the aggregate, we're failing. The private finance into emerging markets and including into Africa over the past 10 years has been declining, not increasing, despite all of these efforts. So what is needed then is to take what we have learned. It's not about putting another 10 years of experimentation in there. We need to take what we've learned and we need to scale it up. We need to replicate it. And one thing that is important there is some clarity about what we're talking about. We need to distinguish, in my view, between what I would call frontier strategies and market strategies. Frontier situations, that's broadly uncertain revenue prospects, high-risk environments, far from the bankability frontier. There has to be a heavy focus on directing official money and blended deep concessional finance into these situations. These are high-impact situations, but these are not about volume. When we think about solutions for frontier situations, we have to think about the political imperative to do so, about the importance for the countries that would receive that kind of finance. But it is not our solution to filling the large financing gap. It's not about the billions. That is about the market strategies. Those are for revenue generating sustainable infrastructure. They're for lower middle and middle income countries with credit ratings that are close enough to bankability to require no or only modest concessional support. And these strategies, they should be directed at increased lending from development banks, but also importantly, to the large untapped sources of funding, especially institutional investors, pension funds, insurance, wealth managers, and sovereign wealth funds. Each of those representing between $50 and $100 trillion in assets under management. They're virtually untapped for emerging markets in general. They are basically untapped for Africa. If you look at European insurance companies, and we just recently did a large-scale survey, insurance companies allocate less than 2% of their assets under management to emerging markets, and most of that goes to China and other parts of the world. Pension funds allocate about 7% to emerging markets. They have a bit more flexibility in what they do, but it is also far too little. There is a scenario under which these flows can be increased significantly, and we work that through. We can double those flows to about 120 billion a year from those sources of funding if we manage to get all of those players in the European markets to adjust their strategies to the 95th percentile, so to the best players in each category. We could then double flows to about 120 billion a year, and that would begin to make a difference. The core approach in the market strategies when we talk about the large amounts has to be to move away from individually tailored funding to wholesale, to platform, to programmatic solutions. That is the core. Now, the development banks can play a central role in this. They can design the strategies, the mechanisms, they can take more risks, they can convene players, they can mobilize private funds. They have to step up to the plate if we want to make this all happen. And they need a big push for that. And I hope the efforts of the Indian G20, which were really outstanding, and those of the Brazilian G20 presidencies to reform the MDBs, that those will bear fruit. We had a quick interaction before about the governance dimension, which I think is lagging, but the push to make bigger, better, more effective banks, that's the headings that the Brazilian presidency is using, that is actually moving forward, and I think that we will see results there. There are promising approaches already out there where the development banks have been innovating. Let me mention a couple. There's green bond funds. I think we're going to hear a bit more from Daouda. The Amundi Green Bond Fund is very interesting. That's something that is replicable. There's a large-scale EU, EIB, African Development Bank initiative now underway on that side. There's ILX, which is a private credit fund for institutional investors, which is investing pension fund money alongside development finance institutions. That works well, that is scalable. We have Bayfront Infrastructure Capital, a very interesting collateralized loan obligation fund in East Asia. We need to bring that to Africa. There's Santander working with IDB Invest in Latin America, selling structured portfolios of exposures that get wrapped with a guarantee, selling those to institutional investors. We need to bring that to Africa. There is, for public money, the smarter use of guarantees, such as the IFCAP that the Asian Development Bank has set up, that is for climate finance projects with a guarantee. They are able to the way they target the guarantee, they're able to make $5 out of every $1. This is a step that we have to take, the smarter use of guarantees. MIGA can play a much bigger role in that, and there is thinking underway for that to enable such schemes at low cost. And then MDBs, on the sovereign side, they should systematically increase the turnover of their portfolios, for instance, by selling sustainable infrastructure assets to the market once they are operating, once they have a stable cash flow attached to them and become sellable in the market. They should not hold them for 20, 30 years as they do, because that means that they have less new funding to lend to Africa and other countries. So what all these schemes share, and I'll say it again, is that they exist, they work, they are eminently scalable, they need the will of shareholders and MDBs to push forward, and they need a shift in internal incentives in these institutions to actually go for this and not hold on to their assets for their revenues, which is the overwhelming incentive today in an institution like the IFC, but also in the World Bank. Nobody even thinks about selling their assets. That has to change if we want to scale up, because we have to bring in the private sector. Okay, so that is on finance. Last couple of thoughts. I mentioned this initially. There are two problems. If we manage with this push and we increase the finance available, we will run into bottlenecks. One bottleneck is project availability. It's project pipelines, quality project pipelines. There is, this was actually a major focus of this IEG, Larry Summers, N.K. Singh report. It is a major focus of the Brazilian roadmap for MDB reform. We need to find ways of more systematically working upstream of investments to create the environment, for instance, offtake agreements, the regulatory environment for independent power producers and the like. And we need to significantly scale up and revamp project preparation facilities. So there are ideas around that. The second constraint we're going to run into is with institutional investors. We mentioned that. I don't want to go into this. Regulation, there has to be a review of regulations that are hindering institutional investors. Those were built with no developing country voices at the table. Those do not take into account the reality in developing countries. That needs to change. Anyway, I probably went on for too long already, but I'm going to hand it over.
It was very interesting. Thank you very much. So if I have to sum up really quickly, so we need more domestic finance, bilateral ODA, more finance from development banks, and of course private financing. And before moving to another speaker, I would like just to perhaps ask you a very brief following question about the point that you mentioned about developing banks. So in your opinion, what prevented them from contributing more to scaling up financing for the energy transition before? So what were the main constraints that didn't allow them to really play a bigger role in the past?
So there are various, as is always true in life. One, if you ask me, is that the incentives in these institutions are overwhelmingly not geared towards making the most efficient use of their capital. There is no shareholder who is out for profit. Therefore, there's no one there in their governance structure who says, why aren't you kind of using that capital even more than you are? It is, you have a simple volume drive with a risk side of the house that is incredibly strong because it is not balanced by a profit motive. So if you would take a private commercial approach to these development banks, they would use those balance sheets much more significantly. That is the approach we took with the capital adequacy panel. With the G20, it was set up by the Italian G20 and then carried forward by the Indonesian G20, and is beginning to get quite a bit of traction. There are many, many pockets of reserves, buffers built into the balance sheets of these institutions that are just not being used because nobody is pushing. We identified a range of those. There's also, these institutions will need more capital. Yeah? And that equation nowadays is difficult. Like where do you go for that capital? You have the geopolitical dimension. Some shareholders would be quite willing to put in more capital, like China, like many of the Europeans. But then others, like the US, do not want that shift, may find it harder to find capital. They would see their shares decline. You have sort of a blockage on the capital side, but we all know that they will need more capital eventually in order to make these things possible.
Thank you very much. Now I'm turning to you, Daouda. So, as coming from the private sector and also Africa, what are your views on this topic?
Well, thank you very much, Rim. It's a pleasure to be here, and thank you to the Policy Center for the New South for inviting us to this very important symposium. It's of course a pleasure also to share the stage with Hans-Peter, who reminded us we used to work together at the IMF 20 years ago. It doesn't make us feel young anymore, but hey, it's time. So first of all, I think my intervention would be on trying to talk about those innovative financing mechanisms that are needed for funding the green transition in Africa. I think what I want to say before making that point is the following, is that before we talked about innovative financing mechanism, we have to also to look at traditional financing mechanism and see why they're not working and how we can make them work. And my sense is, in some cases, I think it requires innovative approaches to make sure that the traditional financing mechanism works. So let me give you one example. For instance, you take private equity. Private equity is a very traditional way of funding any project, including green projects. The problem is, in Africa, we do have a scarcity of such financing equity. And why? Because I think there is a lot of issues that I will come back to. So if you want to make sure that you take really and leverage private equity, you have to make sure that those domestic actors first that do have a lot of funding actually are able to contribute to private equity. Hans-Peter talked about pension funds sort of funding project in other part of the world. In Africa, you have institutional investors, including pension funds, that have asset under management exceeding $2 trillion. How you can make sure that money, at least part of it, is channeled to sort of fund projects, including green projects, would be a first way to go. And it requires actually a number of policy changes, policy innovations, a number of innovation in the regulatory frameworks, so that those institutions feel sort of safe enough to invest part of those assets in those green projects that we are talking about. That's one. Second, I think we do have, and we tend to forget about it, I think one issue that Hans-Peter mentioned that is extremely important is when we want to talk about green transition and how to fund it, we first have to look at domestic source of funding, and of course, which is, we should be more than half, of the funding sources, and then of course we look at the financing, the external financing opportunities, and which I will come back to. So if you look at the domestic sources, one type of institution that we are not necessarily leveraging enough are the Pan-African financial institutions, in making sure that we push them to work together and collaboratively and to do some co-financing and others, so that they can support investors who want to invest in this type of green investment. And I think this is critical. This is something that we require from in multilateral institutions like the World Bank and or maybe the African Development Bank. But I think this is something we can do also with other institutions in the region. There are so many of them. There is AFC, there is Afrexim Bank, there is TDB, all of and BOAD in West Africa, etc. That's maybe a potential way of sort of encouraging, incentivizing equity financing. So now let me come back to the innovative financing mechanism. I think all of us by now have heard a lot about those tools, whether we are talking about green bonds, whether we are talking about blue bonds, whether we are talking about debt for climate swaps, whether we are talking about carbon market. Everyone here in around this room, I'm sure, have heard about those. They're not necessarily actually innovative because they're being actually implemented in other parts of the world. It's only in Africa, unfortunately, that we are not successful enough to implement them at scale. So let me give you some figures. I think it is estimated as of last year that the green bond market exceeded $2.5 trillion. And you will ask me, what's the share of Africa on that? It is estimated it is about 0.1% of that market. So why? Because there are a number of issues that, unfortunately, and challenges that constrain our ability to bring those instruments to scale. One constraint I would talk about, and of course it's important to address those constraints if you want to sort of bring them to scale, as indicated earlier. One issue, first of all, is the risk issue. Many investors, whether it's domestic investors or foreign investors, tend to see Africa as investing in Africa as being risky. Yes, there are some risks in so many countries. I think countries that are in a conflict, or some countries that are in fragile states, or even countries that are actually mature, sometimes they do also face a number of political risks and political stability issues, or etc. That's certainly okay. The problem is when you have a difference between the actual risk and the perceived risk. Unfortunately, Africa has this issue about, yes, facing actual risks that are legitimate to be considered by investors, but unfortunately also there is a differential between the actual and the perceived risk. There is a tendency to exaggerate the level of risk in many African countries. I do remember, for instance, at that time, the Kenyan president saying that when they were about to go to the international market to issue some Eurobond, they were being reminded that there was a coup in Niger, for instance. Can you imagine, actually, when people do not sort of distinguish between specific country risks that are legitimate to be considered by the investors from others that are really not. And what it means is, unfortunately, countries would actually face a premium, a risk premium, simply because the risk assessment are not in line with their economic fundamentals. Last year, the UNDP came up with a study that estimated that because of the misalignment between credit rating assessment by the big three, the big credit rating agencies, and the country's economic fundamental in Africa, African countries were forced to pay more than $74 billion in additional sort of interest payment, debt service, simply because of that misalignment. So we need to address that. And I think one way to address actual risk is to put in place those de-risking instruments. So the risk mitigation tool that allows investors to be confident enough that they need to come to Africa and they can invest, because there are some institution, whether it's domestic or international, like the World Bank, IFC, that actually come up with the right de-risking instrument. If you do so, I think what you can do is to give assurances to the investors so that they can come and, of course, fund the green transition. But de-risking instruments works for actual risk. My sense is they are not going to work for, baseless risk perception. How do you address that? Maybe you need to have a different agenda. And I think one of the agenda is, of course, to also look at how credit rating agencies do rate African countries to make sure that it is done in an objective manner. And the subjectivity element, which some estimate to at least 20%, is reduced. You cannot eliminate it. I've been working at the independent evaluation of the IMF. We've done a lot of evaluation. There is always some subjectivity involved. The question is how to make sure that you reduce it to the extent of to what possible. It is the problem if, for instance, some credit rating agencies would have part of their element of their credit rating sort of assessment being affected by, let's say, the culture of the analyst, for instance, or actually, the fact that they're not really into the field, and they do not have many officers in the present. So that would be bad. So I think that's the type of thing that we need to make sure that we address. So that's one. Another issue that constrains investors in Africa and that is related to the risk perception, is the risk aversion. And it's not only from international actors, but also from domestic actors. You're a green investor from, any countries in Africa, and you want to invest, you go to the bank, chances are you're not going to get any funding from the bank, simply because, of course, there is some very high degree of risk aversion. Not just that, of course, there are some other issues, but that's also something that is important. That risk aversion also is an issue in many international investors. You go to the World Bank, the Multilateral Development Bank. I was a board member at the IMF. You have a sense that many institutions do think or see low-income countries or many developing countries as being a risky place to come up with innovative financing instruments. So they would want to, first of all, continue with the sort of business as usual. And of course, that's, when you talked about the risk aversion, you're talking about absence of innovation, because if you're risk averse, you're not going to be sort of interested in innovating. So unfortunately, that's also a big issue, so long as I think we don't change the mindset in those institutions. And I'm saying it's both domestic and international financing institutions that need to change their mindset to make sure that, yes, they are ready to accompany countries in Africa to innovate and actually be able to use the funding for green transition. And I think if we are not able to do that, it's going to be extremely difficult to get those, access to more such innovative financing instrument that we talked about. And the reality is those instruments are being used with the help of international institutions in other parts of the world. You go to Latin America, there are many green bonds that are being issued and actually very much at scale. Africa, you're talking about a few of them. And when they happen, we are talking about very little money. And I think this is something that needs to change. If we don't change it, I think it's going to be extremely difficult to leverage these innovative financing instruments that we are talking about. So just to wrap up, I think my main issue here is we need to really not think only about the tools, like we are talking about green bonds or something. Those are simple tools. What is going to make a difference is the approaches. And we need innovative approaches and innovative and different mindset to be able to leverage those tools. And I will finish with that. Innovative approaches start with the government. I think Hans-Peter talked about regulation. You need to have the right regulation to make sure that you can support and give the right incentive to green investors. That's missing or lacking in many African countries. So that's the backstop with the government, as they said, making sure that you have those enabling policy environment and regulatory framework. That's one. You also need to have from financial institution, both domestic and multilateral, that and of course, before I get to that, another thing also is to make sure that you have the right innovative approaches in putting in place the pipeline of bankable green project. I think that's critical. Yes, there is a lack of funding, but of course, if this is sort of aggravated by the lack of project, nothing is going to happen. So we need to make sure that we do have in many African countries those pipeline of feasible, first of all, and then the bankability, you can assess it after, but make sure that if an investor is here from a domestic investor or international investor interested in investing into the green space, they do have choices, and that requires an innovative way of putting together those projects. So you also need innovative approaches from the financiers, whether we are talking about the domestic bank, which unfortunately may not always mobilize the type of funding we are talking about, but most importantly, the Multilateral Development Bank. I believe Hans-Peter and his colleagues from the G20 independent panel came up with very, very interesting and very innovative proposal for the capital adequacy framework of these banks. And some of them are implementing in them, and hopefully they will do it with a lot of ambition and also a lot of efficiency, because at the end of the day also I think they're perfectly right that there is a lot of resources that could be mobilized from those institutions if they do those internal reform, but at the same time if they're able also to very much work together as a system. So that's very much important. And finally, and I would actually finish with that, is of course you need also investors to adopt and embrace innovation. I think, first of all, starting with their own mindset, but making sure that, yes, there are so many opportunities in Africa that can be leveraged and that can be sort of whipped. You have abundant natural capital. You have, so much wind or, solar, all of that are opportunities that you cannot seize if you are stuck in a very much old mindset and risk-averse sort of mindset. We need to make sure that those private investors know that, yes, there is a lot of opportunities and they can actually embrace them if they do have the right behavior. And of course, most importantly, if they're able to build mutually beneficial PPPs with the governments, like making sure that you have project where the risk sharing is very much adequate, because we've seen many PPPs in Africa where unfortunately the government was forced to bear most of the costs, and when there are benefits, actually it goes to the private sector. That's not sustainable, and I think if we are able to have the right regulatory framework for putting in place those right PPPs, we should be able to mobilize a lot of resources for the green transition, and I think this is critical.
Thank you very much, Daouda. You actually answered one of the questions that I had about regulation, so that's great. So we have a few minutes left, and we can open the Q&A sessions. So feel free to raise your hand if you have a question or comment to make. And you can also ask your questions in French. Our panelists understand French, and we can translate in case. So I already saw three. Okay, so we'll start with the gentleman here, then on the first row and the last row, and then we can take another round of questions.
Martin Kissler from the Finance for Development Lab. A question: we both talked about project preparation. It feels like something that has been talked about for a long time. Could you go a bit more into the details of what needs to be done? Are there regional facilities to improve? Is it at the country level? What are the steps between project preparation and the financial parameters that can be a blocker? So where are the gaps and why efforts that I think it's been 10 years that we talked about that have not worked yet?
Thank you. We'll take also the question of the gentleman on the front. Yeah.
Thank you. Thank you very much, dear panelists, for such an insightful introduction. My name is Daniel Saka. I'm a former investment banker, professional, and a recent graduate and fellow at the Harvard Kennedy School of Government. And my question is actually twofold. First, to build back on the first question about the project preparation. We saw new ways of introducing high-risk taking from philanthropic to merge with the PPPs to create what they call the PPPP, philanthropic public-private partnership. We saw few instances of those financing strategy in Africa, but not so many. Why didn't we see a multiplication of philanthropic like the Bloomberg Foundation coming into taking higher risk to prepare for projects and prepare the land ahead of all the other financing institutions coming later? And the question is, if we do that, if we build it, will they come later? And the second question is really to dig into more into the green transition, to talk more about the differentiation between adaptation and mitigation. We see a lot of greenfield projects, but we don't see that much adaptation project. How can we also leverage new innovative financing solution to push more private capital into where it's really needed in adapting lots of the cities that are currently facing dire needs of financing to adapt for the green transition? Thank you very much.
Thank you. We had a question on the back, the lady in the back. Yeah.
Okay, so thank you so much for the quality of your insights. I'm Amel Zaki. I'm a Senior Advisory Associate at the Africa Business School Advisory Unit. So my question is, as you mentioned, that some reforms are required at the highest level, and take time from a private sector perspective and in a pragmatic lens. What, for example, if you have a company with an ambitious green transition program, what are the capabilities this company should build internally to address this perceived risk problem, and to what is the strategy it should adopt basically to seize the opportunity of innovative financing that are available in the market. Thank you.
So I suggest we answer first the 3 questions, and we'll do a second round. And I already noted the question on the front, another on the back, so don't worry, and we'll go back to you. So Hans-Peter, would you like to start?
Sure, pleasure. Great questions, really. So the first, Martin, was it? Yeah. On regulation. So you're talking about regulation in country. What I was talking about was the upstream from investment projects in country, and in the energy sector in particular, regulation is a very frequent blockage. So Bloomberg NEF, the new energy, whatever the F stands for, they did a very interesting sort of series of exercises over the years trying to look at gaps in regulation that were blocking investments in especially the power sector. And they conclude that in terms of the regulation of sort of the IPP regulation, so the ability for independent power producers to enter a market, you have about 50% of emerging markets and developing countries have deficient regulation there. They conclude that when it comes to the pricing mechanisms in the power sector, about 80% of emerging market development countries have deficient systems, deficient in the sense that they don't provide enough certainty, predictability to private investors to come in. And they have several other dimensions. It's sort of an interesting source to look at least for this sector. And it's often around not just the existence of legislation. You would look, for instance, if I look at distributed renewables, a real great opportunity in Africa. You have 600 million people with no access to energy. A large share of those are probably going to have access to energy in the future without a grid present. So we have to think about distributed renewables. The regulatory framework for distributed renewables in most countries is just either absent or really difficult. You have sort of incumbent power producers who just prevent others from coming in. Nigeria, it's a big thing. There's so much potential in Nigeria. It's been really hard because of that regulatory framework. So that's one. Then Daniel, on project preparation, philanthropies, really good point. You have some like Rockefeller Foundation, for instance, who have been quite active in that field. You have many others, less so, that have sort of tried to invest in innovative schemes and trying to get things off the ground. The numbers are going to be very large. If we think of project preparation facilities, project preparation is somewhere on the order of 5% of the cost and up to, I think, 12% of the cost of projects and infrastructure. Yeah? If we truly think about 20, 30, 50 billion per year in investments, you make the calculation, you need billions in project preparation. Currently, that would overextend philanthropy. Philanthropy can add the early stage thinking. It can add certain slices of risk capital, for instance, in the project development cycle. But other sources of funding will have to come in for that. And one thing that we're doing in this Brazilian G20 context is to put on the table that we have to have much more reimbursable grant schemes because there is not going to be enough official funding for these kinds of projects. So we have to think much more about existing functioning schemes such as reimbursement when projects are successful and the like. So yes, I think it's a very good idea. I think philanthropy, if you look at the GAP, the Global Energy for People and Planet. This is sort of a consortium of philanthropies that works with various IFIs. They've now gotten together with Ajay Banga and the African Development Bank and setting this 300 million energy access goal for Africa. That is a great PPPP in a way. Let's see how it's going to work. So the first couple of years haven't been terribly dynamic yet in that sphere. Differentiating, mitigation, adaptation. I mentioned this. I think it's really important in this whole debate, and there's often confusion around it, to separate what I call frontier situations from market situations. And the approaches that will work are different. Many adaptation projects will be in this frontier category because they don't have revenue streams attached. Or at least the revenue streams can be very indirect and hard to capture. Yeah? And then, therefore, to structure a commercial project out of an adaptation situation can be very difficult. There's actually a footnote here. There's far more going on in the adaptation field, including in Africa, than is often captured and measured. Because most private companies adapt all the time. And when there's a change in climates, or I remember investing in a textile plant. Well, the new machinery they were investing in was totally taking into account the projections on what was going to come. So that was an adaptation investment. The buildings would take into account the risks of flooding today. Yeah? Those are adaptation investments. We don't typically capture those because we always think about public. But many of those public investments, urban environment, flood protections, etc., are going to be what I call these frontier situations. We will need public money. There's no way around that, in my view. And then finally, was it Mazaki? Mana? Okay, Mana, sorry. The difficult high-level reforms, what can the private sector do? There's actually quite a bit going on in the private sector. So there are private sector outfits that are looking for solutions, that are interested. They often will go for some forms of risk protection that Daouda has been discussing, and which for perception or reality reasons are going to be necessary, at least for a time. So you have outfits like I was referring to the Amundi Green Bond Fund. That was kind of initiated with development finance institutions' money, but also private money, and is going to increasingly be bringing in private money. So the structuring, there's some technical assistance associated with that in creating these green bonds in financial institutions in country. That is the public side, but the money is increasingly private side. The ILX fund, where I'm actually on the investment committee, that is private money. This is pension fund money. There's now about a little over €1 billion, and that is now going to go, grow much further. It works well. This is private money investing with full commercial risk, and it's possible. What was necessary in that case was to demonstrate that it's possible from a risk-return perspective. And as Daouda said, there are these distorted perceptions. We had access to the GEMS database, which is this Global Emerging Markets database that development finance institutions, 27 development finance institutions have been building up, which contains data for several decades of credit performance of their assets. That is not a public database. There's a strong push to make that public, and they're very, very gradually moving in that direction. But it was incredibly useful for this, because we went to the pension funds, we showed to them, look, you think this is very risky. The reality is the risk is actually better than OECD in many asset categories. Yeah? Just look at it, 30 years, this is not just one blip. Yeah? And this is many countries. This is countries that you think are impossible to invest in. This is Zambia, this is Malawi. This is not just the major investment.
I'm sorry to interrupt you, Hans-Peter.
Sorry.
Perhaps I'll invite Daouda if he wants to add something so that we can have some time for a second round.
All right, that's fine. Just actually to add to what Hans-Peter had said. On project preparation, I think one issue is the fact that there are limited sort of project preparation facilities from multilaterals that are available to many African countries. Yes, there are some of them from the World Bank, from the African Development Bank, but the type of scope and size we are talking about is very much different from the billion that Hans-Peter is talking about. So it's still the same issue, like where you have a sort of solution, but at very limited scale, and you really find it very difficult to size them, to scale them. I think that's one issue. And I think the philanthropists, in all fairness, have been really very much trying to see how they can help with this. I do remember last November in Dubai during the COP28, there was some philanthropic business forum where one of those issues was exactly how they could do better in supporting project preparation. And of course, if you look at philanthropists, they're doing a lot, but at the same time, if you look at the aggregate sort of philanthropic resources, you're not really talking something that is very much at par with the type of need we are talking about. So the best, in my opinion, the best they can do, of course, is to support those project facilities, sometimes in the forms of early stage funding, sometimes also in the form of using those resources for de-risking, part of the de-risking initiatives. But I think where, in my mind, I think there is a lot of value for philanthropic institutions to contribute is by making sure that they use their convening power and they also use their catalytic role. I think this is critical. And by making sure that they bring around the table and they have that power, all those multilateral, but also national actors together and try to see how to move forward. This is something that is being discussed about, but there is certainly scope for doing more about that. But also, if you want to do more project preparation, you need also high-level political commitment, because it starts from there. You have to make sure that the country itself is aware of the opportunities that are, sort of related to or coming up from these the green investment market. And I think I'm not so sure it's always the case. I think you would be sort of very much amazed and surprised to see the type of information asymmetries that we are seeing. We talk to a lot of I'm heading an organization called AFRICATALYST based in Senegal. We talked to a number of policymakers from some African countries. They would always tell you they're not aware of those opportunities for green funding, or many of them, or they don't know when they're aware of it, how to really sort of seize those opportunities. And I think that's one issue. And that's, of course, complicated by the fact that when you talked about green funds, we are talking about more than 80 green funds. I think there was a recent study that sort of tried to estimate the number of regional multilateral green fund around the world. They found that it was more than 80. That's a lot. That's a lot of sort of institution that really can be very much confusing for countries. So if you want to build also, some commitment, you have to make sure the countries, you sort of streamlines those. Can you hear me? Yeah, I think we need to streamline those funding sources to make sure that countries do know how to, to what institution they can get to if they need to support for project preparation and some grant funding. Finally, I think also one issue that also we notice is that there is a lot of capacity weaknesses in terms of project preparation. It means also that the support for project preparation is not just funding, it's mostly also technical, how to make sure that people like ACBF actually are doing their work, the African Capacity Building Foundation, are able to really sort of support countries that need technical assistance to be able to prepare more in project. And lastly, just a short contribution on the adaptation project. I think this is the reason why many African countries have been calling for more adaptation, because if you look at climate finance, adaptation usually at the global level represents less than 25% of the whole funding, the rest being mitigation. So many African countries have been calling for a significant increase in this adaptation funding. And I think during the last COP, there was some sort of commitment to double that. I think that would be a first step. But at the end of the day, I think Hans-Peter is right also that there is an issue with the measurement, because I think some people would tell you that it's hard to distinguish between adaptation finance and, let's say, poverty reduction finance, because at the end of the day, if you are in a disaster prone area and you want to build a road, chances are, if you want to do it well, you have to do it in a climate resilient, using a climate resilient approach. And if you do so, actually, you are funding adaptation in some ways. But it's very difficult to then see this is the part that went to adaptation, this is the part that went to, poverty and sort of reduction and all of that. So I think that's the type of contribution I wanted to add.
Thank you very much. So I believe you have less than 5 minutes left. So I suggest we take the last questions. Okay. Yes, and then the next one there, and the third one here.
Thank you very much, Rim, since you have given us the opportunity to speak in French. So let me speak in Molière's language, with your permission. Bon, premièrement, je voudrais vous féliciter pour vos interventions de haut niveau et très approfondies. Je m'appelle Mohamed Hamidouche, je suis un ancien directeur et vice-président de la Banque africaine de développement. Et je dirige aujourd'hui un cabinet de conseil international dédié au financement des infrastructures en Afrique qui s'appelle Inter-Africa Capital Group. J'ai passé toute ma carrière au service de la Banque africaine de développement pendant 36 ans, à Abidjan, à Londres, au Caire, à Dakar et à Tunis. Le sujet que vous avez choisi est très pertinent et je voudrais vraiment féliciter le Policy Center for the New South pour évoquer aujourd'hui cette question relative au financement et les mécanismes innovants de financement de la transition verte. C'est un sujet qui devient, disons, régulier dans les instances régionales et internationales. J'étais à Nairobi récemment pour les assemblées annuelles de groupe de la Banque africaine de développement. Et comme vous le savez, la BAD avait créé un mécanisme qui s'appelle le African Investment Forum. La dernière version a eu lieu à Nairobi et la précédente à Marrakech en marge des assemblées des institutions de Bretton Woods au mois de novembre de l'année dernière. Et cette question de facilité de préparation de projets était vraiment au centre des discussions. Alors, permettez-moi de rappeler d'abord que SIBF, dans le nouveau secrétaire général, il faut l'applaudir, il est là, avec nous. Voilà, est une institution à laquelle j'ai œuvré à sa création. Donc c'est juste pour que vous le sachiez. Voilà. Nous avons également créé le NEPAD, le nouveau partenariat pour le développement économique en Afrique, et d'autres institutions. Donc la BAD a été également à l'origine de la création du Fonds vert qui est basé à Séoul, n'est-ce pas? Vous ne l'avez pas mentionné, mais il fait partie des 80 fonds que vous avez cités. Alors, nous avons effectivement, comme M. Daouda l'a dit, avec la Banque mondiale, ainsi que la Banque islamique de développement et d'autres institutions, un instrument qui permet de financer la préparation des projets. Donc, Project Preparation Facility, au départ, on octroyait entre 300 000 et 500 000 $. On est monté jusqu'à $1 million pour financer la préparation des projets. Si, au terme des études faites, il s'avère que le projet n'est pas viable, n'est pas bancable, on considère que la facilité qu'on a mise à la disposition de l'emprunteur ou du bénéficiaire n'est pas remboursée. Par contre, si ça aboutit vers la réalisation d'un projet que nous allons financer, on intègre les fonds qui ont été dépensés comme faisant partie du montant du prêt à octroyer par la suite, à la suite des négociations et de l'évaluation du projet. Aujourd'hui, le problème qui se pose lorsque je suis en face d'un ministre du budget ou des finances et que je lui propose des instruments de financement dans le cadre de ces mécanismes innovants, il me dit « je n'ai pas de projet bancable ». Il a des idées de projets. Il y en a des centaines. Mais vous n'avez pas un projet que je peux intégrer tout de suite dans mon pipeline pour pouvoir commencer à faire la préparation, l'évaluation. Vous avez le cycle du projet. Il faut passer par les différentes étapes avant d'arriver au conseil d'administration pour approbation. Donc, c'est un véritable fléau que nous avons sur le continent africain. Donc, j'invite le secteur privé et les bureaux d'études, n'est-ce pas, à se spécialiser dans le renforcement des capacités, capacity building, n'est-ce pas, afin d'aider nos pays à avoir des projets bancables. On peut le faire au niveau national, on peut le faire au niveau régional. Nous avons quand même les communautés économiques régionales, n'est-ce pas, qui sont partout. Hein. Nous en avons aussi, chapeautés par l'Union africaine, etc. Et malheureusement, malgré toute l'assistance qu'on leur apporte, ils n'arrivent pas à générer suffisamment de projets bancables qu'on peut financer, qu'on peut soumettre à la Banque mondiale, à la BAD, à la Banque islamique de développement, etc. Alors aujourd'hui, la BAD a eu l'autorisation d'utiliser les DTS du Fonds monétaire international. Donc nous avons un président qui communique énormément sur cette problématique. Monsieur Adesina, je crois, c'est le président de la BAD qui communique le plus à l'échelle planétaire. Il était au G20, il était avec les grands de ce monde, etc. Et vraiment, on fait un plaidoyer incroyable pour pouvoir sensibiliser la communauté internationale sur les problèmes que nous rencontrons au niveau de l'Afrique. Ça, c'est la première observation que je voulais faire. La deuxième, il faut quand même dénoncer l'attitude des pays du Nord qui n'ont pas quand même respecté leurs engagements en faveur du continent africain et des pays du Sud de façon générale. Et il faut le dire aussi qu'il y a des événements qu'on connaît aujourd'hui, la guerre en Ukraine, etc. N'est-ce pas? Donc on a détourné énormément de ressources pour aller financer l'achat des armes, etc., plutôt que de financer le développement. Donc ça aussi, c'est un problème, n'est-ce pas? Vous avez mentionné la COP28 à Dubaï, et c'est une question qui a été évoquée en long et en large à cette occasion, etc. Alors je termine mon propos pour dire que le groupe de coordination arabe, qui comprend une dizaine d'institutions, la Banque islamique de développement, la Banque arabe pour le développement économique, le Fonds de l'OPEP, n'est-ce pas, le Fonds saoudien, etc., au mois de novembre dernier, ont annoncé une enveloppe à hauteur de 50 milliards de dollars à destination du continent africain. Et lors du sommet Afrique-Arabie saoudite qui a eu lieu à Riyad cette année, l'Arabie saoudite a annoncé aussi 25 milliards de dollars à destination de l'Afrique. Donc voilà de nouvelles ressources. J'étais à Riyad, j'étais à Khartoum avant que la BADEA ne se déplace au Caire, à Riyad à cause des problèmes que le Soudan connaît, etc. Ils me disent, monsieur Hamidouche, aidez-nous à trouver des projets bancables. On a l'argent, mais on ne sait pas quoi faire avec. Merci.
Merci beaucoup. Thank you. So for fairness, we will follow the order of requests. So we had a question behind. I just kindly ask you to be brief so that we can be able to answer and break for lunch break.
So thank you
Please.
very much. I had a question for Daouda. Daouda, I really liked your point around how do we make existing structures work more effectively. So I would love to hear how we can make national development banks more robust to support the green transition agenda outside setting up national development green banks.
Thank you. We had a question on the third row. On the far, and then.
Yeah, excuse me. I'm glad you mentioned adaptation because it is a neglected part of the discussion. I had something to say about that, but I won't. On PPPs, both the institutions you worked for have done research on PPPs, right? Charles Kenny has done it at the Center for Development Governance, and he finds that impact to be marginal in the context of the SDG agenda. Sarah Attridge has done work for the ODI on PPPs. For every $1 of multilateral finance, she found it generated 75 cents of private finance in general for developing countries, and for least developed countries, it generated half of that amount. If that's the model, there is simply no way that you're going to finance the kind of investments required for climate mitigation, particularly in the energy system, because it just doesn't add up economically. And in that context, the one model that we know has worked for the energy systems is the Chinese model. Right, we just had the research that was published this week. Two-thirds of the planned solar and wind capacity in the world is being generated in China. I don't think China is using public-private partnerships or innovative finance, and it would be nice for people to look at what China is doing in the energy system, because that is the only way that we're going to make effective green transitions across the globe, and including in Africa.
Thank you very much. We had a question.
Thank you very much. I'm Aziz Ajmiru. I'm professor in the 6P. I was the vis-a-vis of the World Bank for financing projects in Morocco for about 10 years. And I wonder if the question is about financing or about the willingness to do it by the countries. We are speaking about Africa. Africa is more than 50 countries. They are not in the same level in development. And I think the willingness to do it, to be engaged, to have this green transition is very important before financing. The second question is about, is there is any willingness from developed countries, particularly, for example, G7, and eventually some countries like G20, to go in help to Africa. The intervention about Labad, it's very interesting because if we have the willingness from countries in Africa, we can gain in terms of consistency, especially when it comes to the question about financing.
I am very sorry, but I have been told we have overstepped our timing for this session. So what I invite you to do is to take advantage of the lunch break to perhaps continue the discussion and get your point heard. Thank you again very much, Daouda and Hans-Peter, for your interventions. And thank you for the audience for being so engaged. Thank you.